All right, let's look at the stock market. SPY, the S&P 500, the Russell, and FEZ, the Stocks 50. Plus, we're going to look in at our new app, the Market Condition Monitor, to get some information about these market conditions and when exactly the timing was that they gave us important turns in the market, or when they had been telling us about conditions that were likely to be trending. So really important information here. Let's look at the SPY first. Remember that our analysis has talked about this period of risk, the period of risk being late in this cycle over here where there was a nesting going on between the minor cycle and the dominant cycle there, the blue one. Now remember, cycle analysis looks at the rhythms of the market and essentially is a visual depiction of money flows. So we were expecting that this yellow area, the period of risk, was going to bring a decline, and we talked about that the last few weeks of it, just as over here, could bring very sharp declines. That period of risk was late January through sometime in early April. It may extend further out here into May, and I'll show you that in a while, because that green dash is the FEZ and the RUT, which could continue to the downside out into the May timeframe. Here you could see our reversal scout as it turned down over here and looked negative, and we downgraded this today because of the magnitude of decline and essentially looking at lower levels in here. Well, this black indication of the projection was coming down to the 38%. We've now reduced that here to the 50%, 383. Remember that we said that the SPY was likely to fall between 30 and 60 points during this time frame. Well, it's now moved down over 30 points, so it's in that target zone and still has a lot of downside risk. So this 391 that we talked about, well, that's absolutely been hit. And now over here, the 383 is likely, and these are potential, 374.50, and down over here, the 383. And you have to put back in the conversation the potential of getting back down to that low at 348.11. Now, I think that this is an extremely low probability getting down there, but we're in a panicky situation right now, and it can fall very hard when you're in these type of situations. So if you look at this one, the last 3 weeks fell essentially from 406 all the way down over here to 350. So that was, 66 points. 56 points down in just a few weeks' time. So there's a lot of room for decline in here still. So this is the period of risk. This is what we were expecting. And the indications are that there will be further declines. What I want to do is go over now to the MCM, the Market Condition Indicator. This is our new indicator, which will be available to be able to subscribe to as a standalone product that we have. Though for the next couple of days through this weekend, anybody who becomes a level 4 member will be grandfathered in and get this for absolutely for free. What we're looking at here is the time frames view right over here and the daily. And what I want you to see is that the conditions for these 4 different stock indexes, we're looking at SPY, QQQ, IWM, and DAI, have all been pointing to the downside for quite a while in the daily time frame over here. So these we're looking at the reversal scout and the slim ribbon. These are the change logs over here as things do change. Looking at all of the different symbols that we have in here. So the S&P 500 went negative on 221, as you can see, and on the slim ribbon on 228. Of course, this is March 10th, so it's been in negative condition since then. The QQQ is neutral here and negative here. This is since 221, the IWM since 214, so it's been close to a month that it's been negative on the reversal scout, and only turned negative on the slim ribbon a few days ago. And the diamonds, you can see since 221, 223, these have been negative. The real key is when you have these things as negative, what does this shorter term tell you? And here, if I look at the 2-hour charts, which we zoom in a lot on to get some indications, I'm switching it to the 2 hours. and you can see that back 3-7, which is last Tuesday, 3-8 is Wednesday, where these went negative. So there was an alignment of negative occurrences here. These are all showing you earlier and midweek this week is when these turned negative, and did set up the alignment between the daily and the intraday. Of course, when you go down into 15 minutes over here, that's going to show you also extreme negativity when you look at that. We show you this all the time on the SIR daily that runs live. So you can get on the 15-minute. I want to go into the trader view right over here so that you can see, and I'm looking now at short term. It looks at weekly, daily, and 2-hour, and you can see in here that this SPY is bearish, the IWM is bearish, the DAI is bearish. That's all been in alignment there. And slightly bearish is you've got the daily still neutral over here and the weekly positive in the QQQ on the reversal scout. So this has been only slightly bearish, and it has been somewhat overperforming. So you get a good idea looking at that, looking at the short term. If you were a scalper, you could be looking at the interdays right in there, which at the moment is neutral here at midday on Friday. And the near term, if you're a short-term swing trader, you can see very, very bearish. So on the short term, it's neutralized, but in this case, the likelihood of further declines, you can see, are very significant. Going back here to the time frames view, and you can see right over there that it is showing you very negative conditions in there. By the way, you can also look at individual stocks. I'm just going to go here and look at Apple, AAPL, and pull that up, and there's Apple right over there, as you can see, and then you can see all the conditions in there. Apple right now, looking at all of the conditions, you can see monthly, weekly, daily, 2-hour, 15-minute, is kind of turning over right over here and mixed as things were positive, and now it's rolling over to less positive conditions in there. So again, this is the market conditions monitor giving you very negative alignments here between the 2-hour here and the daily right over here, telling you that there is a strong likelihood that they are going to continue to move to the downside. Looking at that really important indicator, and I hope you do become an askSlim member or subscribe when this becomes a standalone product that you can get right now. And I'll tell you at the end of this how you can get that for free coming up in just a few minutes. Again, this is the SPY, and you can see in here we're in this period where it is very likely to keep moving down very significantly. Now, I want to, because I have this FEZ and RUT on here, I want to move over to the RUT analysis so that you can see that right here. And RUT is now moving down through these support areas and comes out way over here into the May timeframe before that bottom is due. This is going to make us look at the potential. Instead of this downside move ending out into the where we looked at from mid-March to early April, this really makes us look hard at the possibility of this decline ending more in the May timeframe. So this is important to look at, and you can see the cyclical patterns in there as they align. So somewhere in here between late April and late May is where these declines are likely to turn back upward again. And this now, because it's gotten down here to the 61.8%, will be downgraded again for our members, and looking at the potential then for getting to the 1640 area down there. So this is really bad. Look what happened here is it got to the sell zone here and just really moved down sharply. The reversal scout moving down again, and remember our market condition monitor showed this in a negative condition. Let's look at the FEZ, which has been just a tower of strength here as these top 50 stocks in Europe have been just so absolutely powerful in this upside move. Now you're getting right in here an engulfing pattern. Now this is really a setup for some significant pullback. Now, it is pretty likely that this pullback will come out into May, maybe down to around 39. That would be losing about 10% from here. There are some minor supports in there, but I actually think 39 is a reasonable target. And again, I want you to see this window right in here for the decline to bottom. In other words, the troughs to form in here is out into this period between late April and potentially early June. This is going to make us look at the potential for this decline in the stock market to go further out. And I think that is an important thing for you to be thinking about as an investor, that especially if you're watching from Europe, that this has got problems. Take a look at the cyclicality in here as I go way, way back in here to the pandemic low right over here, way in March of 2020, and you can see the dominant cycle pattern here, and this vertical is where the actual low occurred. Here's where the actual low occurred. Amazing how beautiful the cyclicality is in here. And if you look at the minor thirds that are in there, you can see 1, 2, and 3, and 1 and 2 looking to bottom in here somewhere, and then maybe a little pop, and this real risk, the period of risk, comes out over here in April and May. So this is a worrisome period for the European big stocks, and that has to be telling us that there's a potential for this decline in the stock market to go way out into that May timeframe out there. So you got to be alerted to that, that while we were looking for a low to come in our stock market in sometime mid-late March or even out into April, the Russell, the FEZ, they're telling us that that could go longer, and this whole thing could end up going deeper. There is a lot of selling in the market right now, and the panicky selling is just starting, and it just doesn't come and go in a couple of days. It takes longer than that and usually ends up with some kind of capitulation. And that's kind of what I think is coming here for the stock market.